Oh, yeah, that's right. The first earnings video of the season, baby. Earnings season is kicking off, and we're hitting you up with IBM real quick. And I hope you are really excited for this one, like I am. So, IBM here was down 0.31% in the normal trading session, down 0.5 in after hours. Nothing too crazy, all things considered. The market as a whole really fell around 1.4% in the normal trading session. So IBM actually is technically outperforming the market, even though it is down after hours after reporting earnings. So we'll take a look at those earnings and see what exactly is going on with international business machines, baby. So if we're looking at the numbers, I gotta say, I think I'm almost surprised the stock isn't down further. Slightly shocking. So, um, overall, you see quarter three non-GAAP EPS of $2.58, and a GAAP EPS. That non-GAAP is in line, and a GAAP EPS of $1.89 actually misses by 19 cents. Not that good. Don't like to miss on a profitability standpoint for sure, especially when you see the revenue line, 17.56 billion, is down 2.6 year over year, but that's in line as well, so nothing crazy. Just in line results though. Just kind of shocks me. In line and a miss on profitability makes it feel like this would go up, but again, who knows? So you see overall adjusted gross margin at 49% versus consensus of 48.6, which is good, and 48 in Q2, so that's good there. A little bit of a word from the CEO here, Arvind Krishna. The strong performance of our cloud business, led by Red Hat, underscores the growing client adoption of our hybrid cloud platform. Again, and I talked to you about this, the main story for this company really is cloud right now and the future that holds for this company. I mentioned that in my earnings video, my anticipated earnings reports to watch. You should have watched that one if you didn't. If you didn't watch it, posted it on Sunday. You better be watching it. Separating the managed infrastructure services business creates a market-leading standalone company and further sharpens our focus on IBM's open hybrid cloud platform and AI capabilities. This will accelerate our growth strategy and better position IBM to seize the $1 trillion hybrid cloud opportunity that is ahead of them, supposedly, in this field. $1 trillion market with this hybrid cloud platform. We'll see how that looks for them, but again, cloud's big. Cloud's big. You need to mention that. So overall, third straight quarter of revenue declines. Again, that's kind of why I would say might be shocking for some investors. They might, not be too happy. But again, IBM still ends up being a relatively boring stock at the end of the day. It doesn't move incredibly too much. I wish it did kind of more, but it just all depends. Last week, IBM announced plans to spin off the managed infrastructure unit of the global technology services business into a new company to focus on the obviously high cloud platform, as we saw before. Quarter three cloud and cognitive software sales were up 7%, which is big stuff for them, to 5.6 billion compared to a consensus of 5.4. So that is good. Red Hat alone was up 17%, which is flat in line with the Q2 growth. Total cloud sales were up 19%. That is big stuff. To 6 billion, but Q2 they grew 30%, so a little bit of a decline there. You don't like to see a decline in that growth, but again, 19% still massive growth when we're talking about billions of dollars. Global technology services were down 4% compared to 8% decline in Q2, so an improvement there, and it was above consensus. Global business services totaled 3.97 versus a consensus of 3.93, so a beat there. And systems of 1.26 versus a consensus of 1.46, missed by a decent margin, and that's kind of expected. Systems is It used to be a big portion of this company, and you think about it a lot less when you talk about hardware. It's just not nearly as important for this company as what cloud could be. So you don't look too much into that number anymore. Even though in the old days that's might have been what you really looked for, but um, adjusted gross margin was 49%, as we saw. Cash from operating activities totaled 15.8 billion, and free cash flow of 10.8 billion is incredible from a trailing 12-month standpoint. Debt, as we saw, we'll look at that. We'll look real quick at the press release and see from any highlights they have to offer me. I'm curious on this aspect here. They really mention a lot about cloud here again, and how this could be a big thing for them. Overall, the EPS rose 1% from a GAAP perspective, so it did rise year over year, which is good. Net income rose 2%, so again, you can't complain about growth. I mean, we like it. We like to see that. Nothing crazy beyond what we actually saw in the previous thing there, as far as this goes into everything from every category. So nothing crazy there. We already looked at those categories before. And overall, but you do see EPS for the full year so far is down 27% compared to last year. Not unexpected again. Pandemic, there's some excuses for this year. I get it. I'll give them credit. And then overall, nothing super crazy beyond this as well. I do want to go over the balance sheet, obviously, as we love to with these companies. And again, because it's a company that pays a good dividend, so we need to see if they're willing to sustain that. Overall, they're giving me a 9 months comparison, which I'm plenty okay with. I love 9 months. 9 months to a year is beautiful. So current assets of 39.8 billion versus 38.4. You see growth there. Total assets in general of 154 billion versus 152 billion. Good growth there. I'd like to see liabilities stay the same or shrink. I really would, but we'll see how that looks. Total current liabilities of 37.9 versus 37.7. Didn't increase by as much as the total assets grew, so I like that. And total liabilities went from 132.7 from 131.2 before. So overall, you did see that technically assets did rise more than the liability, so I can't be upset with that. I can't be upset. Total stockholder equity of 21 billion versus 20.9 billion, 21.3 versus 20.9 it's a growth on the balance sheet. We're okay with that, and we're not upset. So good numbers for this company, and valuation wise, it's really not that expensive, especially for the dividend that they offer. I like this decrease, I really do, and it's something I'd certainly be considering. I mean, down on the year, this is likely going to be something I add to my M1 Finance portfolio, because I think there's still plenty of room for this. But again, I mean, we talk about boring stocks, still isn't broken even on the year. So I did want to mention that this is good stuff waiting to happen. Definitely a big fan of IBM here. So I'm probably going to be picking some up with a dividend yield that's juicy like that. I'm not upset. That's all I got for you today, and I hope you enjoyed.